In this video, we're going to go over this settlement where a real estate buyer had to actually pay out $62 million for some claims that they were deceiving customers about benefits of its service. And further, we're going to go over just a couple days ago, a class action lawsuit that's going up against this same real estate buyer. So the reason I'm doing this video is I want you to see what's coming down the pipeline so you can run your business ethically, smoothly, and just be honest with people when you're out there buying and selling real estate. All right, let's do it. All right, class, it's Chris Haskins with the realestateroundup.com. My mission and ministry is to raise your financial literacy through real estate investing and entrepreneurship. So today is a little different. Generally speaking, we're doing training and coaching and all that stuff. But when I was in my back office for my miserable IRA, looking at the stocks that I have, it was a horrific little thing that I had to look at. I saw in the corner of the screen there, just a couple days ago, a class action lawsuit that's going up against this company called Opendoor. So before we get to the class action lawsuit, I want to tell you about the settlement that they just had to pay. So this video, we're going to be coming back and forth with the video, and I'm going to be showing you my screen so you see exactly what it is I'm seeing regarding these allegations and the settlement. So when I saw the class action lawsuit, I started doing some digging, right? And then I saw this settlement. I had no idea that they had to actually pay out. The FTC charged them $62 million to settle these claims. So I went to see, well, who is Opendoor and what is it that they do? Because they actually don't even do business in my part of town, right? So let's look at it here. I went to their website, Opendoor. What is Opendoor? Okay. What is an iBuyer and how does it work? So Opendoor is considered to be an iBuyer. Selling a home can be painfully complex. The idea of a simpler, more convenient, and more certain real estate transaction has led to a new way to buy and sell homes. We call it a good customer experience. Everyone else calls it iBuying. Okay, well, what is an iBuyer? An iBuyer is a company that uses technology to make an offer on your home instantly. iBuyers represent a dramatic shift in the way people are buying and selling homes, offering in many cases a simpler, more convenient alternative to a traditional home sale. Okay, well, that sounds cool to me. So as I scroll down here, how does the iBuyer business model work? Not all iBuyers share the same business model. So we think of ourselves as a full service real estate company where you can buy, sell, and trade in a home. So that kind of sounds like you and me, right? When we buy, sell, trade, we do the exact same thing as these guys are doing. That's why I think it's so important for you to understand what's going on with this company here. So let's get on down here. Let's see, what is the difference between iBuying versus home flipping? Well, iBuyers are often confused with home flippers, yet the two business models can be very different. Home flippers want to profit from buying low and selling high. They often target distressed properties, making major renovations, and then sell at a significantly higher price. You daggone right, that's what we do. We buy real estate, fix it up, and sell it. All right? But on the other hand, iBuyers typically focus on homes in good condition. They aim to make an offer in line with what a reasonable buyer would pay. Reasonable buyer, what does that mean? Commonly referred to as a fair market. In most cases, they'll conduct minimal repairs to ensure the safety and functionality of the home before the next buyer. I don't know what, this kind of sounds like wholetailing to me. Wholetailing, that's where we do a little bit of repairs to bring the condition of the property up to good standing, but then the end buyer still can do more work. Now, if you don't have any idea what wholetailing real estate is, I'm going to put a link right there for you to see what that is. Because wholetailing is, we've been doing that for years. So, they're basically making offers on real estate and then reselling it, but they're not necessarily doing it to make a profit. So I'm just confused on that. So your next question is, how is an iBuyer going to give me a competitive offer, then turn around and sell my home at a competitive price and stay in business? You're right. That is a good question. So basically, they have all types of fees that they're going to charge people when they buy and sell the property, and that's how they're making their money. Well, let's go and see what the FTC had to say about that. And this is the first case that I want to talk to you about, the $62 million that came in, okay? So here we go. FTC takes action to stop online home buying firm Opendoor Labs from cheating potential sellers with misleading claims about its home buying service. company will have to pay $62 million and stop deceiving consumers about the supposed benefits of its service. Oh boy, if that doesn't sound pretty challenging, and I don't even know the word, if that doesn't sting, I don't know what does. The FTC today took action against online home buying firm Opendoor Labs for cheating potential home sellers. Oh my Lord, this gets so juicy. By tricking them into thinking that they can make more money selling their home to them than on the open market. You tricking moms and pops? FTC alleges the Opendoor pitched potential sellers using misleading and deceptive information. In reality, most people who sold to Opendoor made thousands of dollars less than what they would have made selling their homes through the traditional process. Oh my Lord, you do not want to have these strikes against you, I promise. Under a proposed administrative order, Opendoor will have to pay $62 million, all right, to stop its deceptive tactics. Now, you don't want to be considered deceiving grandma and grandpa when you're out there buying and selling houses. So I'm going to have a whole moral. I'm going to bring this all the way back around, y'all, to get to you. Make sure you watch it to the end, because I've got something we can all learn from these cases here, right? Because every piece of real estate is different. Every transaction is different. Opendoor promises to revolutionize the real estate market, but built its business on using old-fashioned deception about how much consumers could earn from selling their homes on the platform. Now, you can read this. This is right from the FTC.gov, y'all, right on the FTC website. So let's take a look at what these charges are. All right. The agency's investigation found that Opendoor also violated the law by misrepresenting that Opendoor used projected market values when making offers to buy homes, when in fact, those prices included downward adjustments to the market values. Now, Opendoor's marketing materials included charts comparing their consumers' net proceeds from selling to Opendoor versus on the market. That sounds like something we do every day. I am honest with my sellers, Ms. Smith. You could probably get more money selling there, but you make less money with me. Now, let's take a look at their marketing. Let's go to the other page here. So here is the actual complaint right here that they filed. Opendoor promises consumers market value for their homes. Respondents advertised this home buying service by claiming that Opendoor made fair market or market value offers. For example, on Facebook, Opendoor claimed that it allows consumers to get a fair market offer on their home without ever listing it. And here, I guess they put the actual ad in the complaint. Get a fair market offer on your home without ever listing. Sell to Opendoor for a certain sale with no risk of financing fall through. Now, I want to stay here because this is kind of where I wanted to end on the settlement. Your advertising might sound something like this. So I'm stressing to you, I'm urging you to be careful. I don't have any idea how a computer could actually tell the shifting and the market fluctuations, because real estate is so local. I mean, every piece is different. Every city is different. But if you look at this ad here, it could be right on the edge of something that you might be advertising in your ads or on your mailers or on your postcards or on your website, right? A fair market. But to me, all my offers are fair. I gave you exactly what you agreed to. Now, could somebody else misconstrue or think that I'm trying to make it sound like what I think is fair might not be fair over there? So just be careful. Be careful, y'all. So it's saying get a fair market offer. I presume that maybe we should say get a fair offer, because we don't even know what the fair market is for every piece of property. And from my opinion, a fair market offer is what a buyer's willing to pay and what a seller's willing to sell for. So who's to say this stuff? I don't want you to get all jammed up in these word games and all this stuff. So be careful out there, y'all. Be careful. Let's see if there's anything else here. Okay, they also, Opendoor made money from disclosing fees, when in reality it made money from buying low and selling high. That's the exact same thing we do. Consumers likely would have paid the same amount of repair costs whether they sold their home through Opendoor or in traditional sales. Consumers would likely have paid less in cost by selling to Opendoor than they would have paid in traditional sales. So these are all the things that they said that they are misrepresenting themselves by. So guys, make sure when you agree to pay closing costs, when you agree to say, look, we're fair offer, Make sure your marketing is, you gotta be serious, you gotta be upfront with mom and pop when you do this stuff. So the charts that that Open Door is showing people, these charts always showed that consumers would make thousands of dollars more by selling to Open Door. In fact, the complaint states the vast majority of consumers who sold Open Door actually lost thousands of dollars compared with selling to the traditional market, because the company's offers have been below market value on average, and its costs have been higher than what consumers would typically pay when using a traditional realtor. All right, so you got the idea of them, what they're saying, what the FTC is saying. So be honest. This is I'm boiling all this down to let you know that this is a people business. This is a people business. Don't get caught up with getting fines and misleading sellers. So let's look at my next thing I wanted to show you was this class action lawsuit. So look at this, y'all. It's just amazing to me. It's just truly amazing. So this is what I saw that led me to that settlement. The law offices of Frank R. Cruz announces the filing of a securities class action on behalf of Open Door Technologies. Oh my goodness, that does not sound, could you imagine having your name on that? On September 19th, 2022, Bloomberg reported that Open Door appeared to have lost money on 42% of its transactions in August 2022, further stating that the data was even worse in key markets, where Open Door lost money on up to 76% of sales. The findings were evidence of failure of Open Door's algorithm to accurately adjust to changing market conditions. Now, help me understand here, Open Door's algorithm. I just can't comprehend how an algorithm can tell why people are moving, where they're moving, how much real estate is going up, how much is going down. Is the weather or the hurricane, all this stuff, people losing jobs, as a big company shut down? Are interest rates going up? Are they going down? Is there a pandemic? How can an algorithm, I'm asking y'all Roundup, how can an algorithm tell the price of real estate is going up or down and which way it's going to go? And look, by the way, make sure you join me and my friend Mike Fritz coming up in the next few weeks. We're going to be doing the Private Money Mastery 2-day live event, right? So what we're going to do is show you how we raise millions of dollars to buy not only single family, but Mike is a master at doing multifamily. So Mike and I have chosen to come on. I'm going to show you how I do my private lending, and Mike is going to show you how he raises private investors to buy multifamily properties. So this is going to be 2 full days with us, and it's only going to cost you nothing but a Starbucks coffee to hang out with us for the day, right? So I look forward to seeing you. Come on in. Start raising money. This is the best time to be raising private money since interest rates are going up, all right? So on this news, Open Door stock fell 50 cents or 12% over the next 2 consecutive days to close at $3.56 per share in September, whatever, The complaint filed in this class action alleges that throughout the class period, defendants made materially false and or misleading statements, as well as failed to disclose material adverse facts about the company's business, operations, and prospects. Specifically, the offering documents and defendants failed to disclose to investors that 1. Remember now, how can an algorithm tell where real estate is going? The algorithm used by the company to make offers for homes could not accurately adjust to the changing house prices across different market conditions and economic cycles. We all know that. There is no computer that can tell you A to Z where the real estate market is going. It's just not going to happen. As a result, the company was at an increased risk of sustaining significant and repeated loss due to residential real estate pricing fluctuations. Now, fluctuations. Round up. They are trying to get a computer to do what all this is coming to. I wanted to boil down to this. This is a people business. This is a people business, Roundup homies, right? This is how it works. People buy real estate from people. Now, there are some computers and iBuyers out there that do well, but look at Zillow. They even stopped doing this craziness. How can a computer go out there and project and forecast offers? So every time you buy a house, and generally speaking, whether it's single family or multifamily, you're buying it from a person. Every time you get a loan, a person has to underwrite the deal. Every time you get a home inspection, home appraisal, every time somebody runs your credit, there's a person that's going to look at the data. Every time you sell a house, a realtor is going to come in. All this stuff is run by what? People. So for you to think that you can get out there and have a computer running your entire business, it's just not going to happen. So don't think that you could just put it all on autopilot, because it doesn't work. Real estate is a people business. Every loan I've ever gotten, somebody had to sign on the dotted line to loan me the money. That's just how it works. So I don't want you to get into a sling like these guys did, putting everything on the system or the algorithm, as a lot of us think we can do. So you can check out, if you just go to FTC or frankcruzlaw.com, you can see all the cases and all the stuff that's pending here. I don't want to kind of belabor those facts, but my point today was just to say, listen, have integrity with your people. Do what you say you're going to do. Don't overpromise. Always, always, always over-deliver, if anything. Right? If you just keep your word, you will succeed in this business. Don't make up things that you can't do. All right. So listen, if this has helped you at all, share this content with anybody else that's looking to get into the real estate business. Right. Subscribe to the channel Roundup Homies, and like the content. Hit that thumbs up button for your boy. I look forward to seeing you at the Private Money Mastery, and be careful out there. Don't mislead people. Good gracious. It's nasty. Class action lawsuit. I'll see you in the next video. Peace.